Live from the First State, you are listening to the Financial Empowerment Show with the podcast king, Troy Bailey, and the finance queen, Awanda Hodge. The Financial Empowerment Show, creating new fiscal standards one home at a time. Give us a call now at 877-829-1099. That's 877-TAX-1099. And now, here's Troy and Awanda.
Welcome one, welcome all. We want to welcome you to another edition of the Financial Empowerment Show. I am your host, the podcast king, Troy Bailey, and to my right is the finance queen, Awanda Hodge.
Hi, everyone. Finance Queen here.
The Finance Queen. We are on deck, ready to go. Listen, hit that subscribe button if you want to tune into more shows. This is show number 10, Tax Return Facts and Fears.
Yeah.
Alrighty?
So you guys have a tax person here that you can
get correct.
All your questions answered with, but we have a few points that we just want to get out to you, give you some quick information that you can use in your everyday life that's going to be relevant for your tax returns. Right?
That is right. And you're saying, man, April 15th is gone. I ain't worrying about no taxes no more. I got my refund. Guess what? The IRS is behind this year.
Oh, really?
They are still doing taxes from 2020. Alrighty. I have clients who still didn't get their refund when we filed tax returns back in April.
Right.
Alrighty. So,
and I'm sure there are some people that haven't filed their taxes.
Of course.
Right?
And there's some people who filed the extension, and that's good till October 16th.
So do you actually, this is just a quick question, we're getting right into it. If you're due a refund,
okay,
do you actually need to file an extension, or does that April 15th date apply to you?
That's a good question. I got the answer, Wanda. Okay, so here's how it works. If you think you're going to get a refund, and if you file an extension or not, it's not going to affect you because you get money back.
Okay.
However, if you do your return and you didn't file an extension and you have a balance due, you would get penalized from, it's called failure to file. Then penalties and interest will apply from April 15th until you file. Now, if you file an extension and you still owe, that doesn't mean you're not going to get interest and penalties. Stop. Because if you think you're going to owe, file an extension, pay something towards what you think you're going to owe.
So you'll just avoid the failure to file if
that
you
is
filed
correct.
An extension.
That is correct.
Okay, that's good information.
That's good information.
Good information.
But show number 10, tax return, facts and fears. And guess what? It is a lot of fears out there. For a lot of people scared of the IRS. I'm not scared of. Are you scared of the IRS, Awanda?
I don't want to be in their bad. I don't want to be in their bad book. So
Listen.
I don't know if that's scared of, but I don't want to be audited.
Nobody wants to be audited. Nobody wants to tussle with the IRS. I know it's very difficult now since the staffing shortage, since the pandemic.
I've heard bad stories about that. I heard they would, if you owe them money, I heard that they would take your whole check or seize your. Those are scary things. Even though you're saying don't be scared. That's very scary to think that you're working for however long and that somebody has the power to take 80% of your income because you owe them.
No, what happens is this. Okay, so out of my years of experience, I had one client who the IRS seized their checking account.
Okay.
Now, however, they just don't do that right away. They have series of letters.
Okay.
When they get to that point, guess what? You ignore them for almost 9 months.
Okay. So there's steps. There's steps.
There are
this is
steps.
Not just happening.
That's not just going to happen.
All right.
Okay?
I guess that maybe eases a little bit of the.
Now, to the other point is that when you constantly owe taxes every year, the IRS can contact your employer and change your W-4.
So they can override what you put.
That is correct.
Wow. See,
because they want to stop the bleeding.
Listen, I don't care what you say. The IRS there's some scary folks.
There's some scary folks.
Because they have the ability to override what you told your employer.
You know what? That's a good point. But see, And I have this in my notes. We do have notes, y'all. We want to thank everybody on our financial empowerment team who get all our stuff together and the whole 9 yards. Paul, our engineer back there, all the graphics and everything. Nancy, our producer. We want to thank Trina for my suspenders here. We want to thank everybody for putting this show together. But you make a very good point. And guess what? And I have it right here in my notes. Guess who's in control of how much taxes comes out your paycheck?
You are.
That is correct. Ding, 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 ding.
But you just said that if you owe more than one time, that the IRS has the ability to.
No, not more than one time. It takes years for that.
Oh, so it's several times.
Yeah. It's not going to be like, okay, you owe this year. Next year, IRS calling your employer and knocking down the door and say, change your W-4. And as a matter of fact, they give you time to do it yourself. But the point I'm making is this, and this is in our notes. This is part of the fear. All right. Once you know your tax bracket, you can control the amount of money that comes out of your paycheck every week to cover your tax bracket. So let's get into the talking points. All right. Stop being refund driven. You
want people to stop being refund driven?
That is correct.
So tell me what you feel like refund driven means. That the person they're always expecting to receive
a refund. And a lot of people don't know where refund comes from. You know what refund comes from?
Overpayment.
That's all it is.
I mean, in anything, if you're getting a refund, that means because you overpaid it.
Now, most people who gets earned income credit, those are earned income credit eligibility taxpayers.
Okay.
Who has children, non-children, whatever the case may be. That's one you might hear. Oh, my girlfriend, she got $7,000.
I don't ever recall getting that.
That type. Well, listen. The laws that's been passed through this pandemic, the earned income credit, the child tax credit has been put on steroids.
Oh, you hear me? It's high.
Yeah, it's like out of this world now.
They always do stuff like that when I'm not eligible.
Oh, right. Yeah, your kids are 18, they're grown, they're college, they're out of college. You know what I mean? So you can't get no more earned income credit. But earned income credit, it was based on because you didn't earn enough money.
Oh, so they were trying to give you a little credit.
Incentives, yes. It was back in the 70s where I think it was the Ford administration where they was trying to stimulate the economy. They're saying, okay, if you go out and get a job, we're going to give you credit, money in your pocket.
Right.
Because guess what happens with money in your pocket? You do what? You spend it. And spending money stimulates the economy. That was the goal behind it. But it just spiraled out of what? Out of control, I believe. And everyone expecting to get $7,000, $8,000, $9,000
So
refund.
What is the reason that you want people not to be
refund driven? Okay, so it's certain demographics. That's a good question. So with certain demographics, if you're a single mom with 2 or 3 kids and you earn $30,000, you're getting earned income credit.
Right.
Alrighty. How much? It depends on the age of your child, whatever the case may be. Even if they're 18, you might get the education credit. Alrighty. But after your children, like yourself, are grown, you get income.
You're going to throw me up under the bus.
I'm going to throw you under the bus. All right. Bus number 19. Here it comes. All right. We're going to throw you under the bus because what happens is that certain demographics, you shouldn't expect a big refund because all you're doing is giving back. All IRS is giving you back money you gave to the IRS.
So you really just gave the IRS
interest-free loan,
which is crazy because you could have been using that money to
for what?
Invest, save, pay a bill.
There you go.
Fix your car.
That's right.
Whatever you needed it for, you could have been using that money for that. But
that is correct.
We know this is not the way that we've been originally taught or geared. So you just kind of have to change the wires in your mind to think, don't always expect to receive a refund.
So when I have clients who only get back $400, they get mad at me. My girlfriend got $7,000.
That's right. We want that big check.
She earned $20,000 and got 2 kids and You know what I mean? You earn 80,000 and with no kids, okay? So you have to know your tax bracket. If your tax bracket is the average tax bracket is 11. Am I boring everybody yet? Because this is my field. All right. Are you bored, Wanda?
Just tell them where can they look it up?
Wake up, Nancy.
Where can they look it up to see what their tax bracket is?
That's a very good point. When you do your taxes, ask your tax preparer, what is my tax bracket so I can withhold that during the course of the year.
Right.
That's it. It's really that simple.
Okay.
It's that simple.
That's one good point there. Know your tax bracket so you know what you're responsible for paying. So that's a great thing.
That is right.
And just know that all refunds are not equal. So
all refunds are not equal.
You don't know your girlfriend's circumstances. Maybe her circumstances are different from yours, and that's why she's getting a larger refund.
That is correct.
Than you.
That's correct.
That's a good point.
The average tax bracket is 11%. If you earn 80, 90,000, you might go up to 12, 13%. So you have to have that withheld during the course of the year. That form you use to withhold those taxes are your W-4. If you have any questions how to fill out your W-4, give us a call at 1-800-829. What's the phone number, Wanda? 877-829-1099.
Right. So I have a few points. Okay. Even though I'm not a tax professional, I have been filing taxes for a very long time.
Okay.
So I will say to the people to have one place that you gather your records throughout the year.
That's a good point.
You're not all over the place trying to get your documents in order when it is time
a file cabinet costs $80 at Staples.
Okay. So if you get a file cabinet and then as the year goes on, you put things in there that are going to be relevant to when it's time for you to file your taxes.
That is correct.
I also say ask your tax professional questions. Like, you're paying this person for a service.
That is correct.
So don't just blindly sign off on whatever they do and they give you and don't understand.
That is our job to let you understand what you're doing with your taxes. That is correct, Awanda.
And if there's a person that's not willing to explain it to you, then I wouldn't be going to them.
Come to Goldberg Tax Services.
I wouldn't be going to them because there are millions of people that prepare taxes.
That is correct.
But you want to learn and you want to know what's actually going on in your financial.
That's a good point. And why did I get to 7,000? People get to 7,000. I don't care. I just get it. Why did you get that 7,000? Let me explain that to you as well.
And I always ask, well, am I eligible? Are there any new tax laws or breaks that have come out this year? I think you should be having a fluid conversation with your tax preparer so that they know your situation, because they may not automatically know that you have a child in college or that you're in college or that you have to pay for uniforms.
That is correct.
You have to have these conversations to let them know so that they can tell you what things you're eligible for. Correct?
That is correct, because it's the most important document you file every year, your tax return. Anyone who has an income has to file a tax return. If you don't, you'll get that letter from the IRS. We have income on file at the IRS, and we don't have a tax return for it. You need to file a tax return. So, like Awanda said, we agree, y'all. Hey, look at that. Yeah.
Hey, we agree for one.
Listen, save your documents all year. That's pertinent to your taxes. If you own a home, if you own a small business, save those. Get a bank account. Save your bank statement so we can verify that you use that money for the business. All right. If you have a home, make sure you get all your 1098 mortgage statements, investments. Awanda, that's your part. What do they? You should be receiving a tax document. That is correct. At the end of the year for any investments that you have, even for your bank account. That is correct. Be receiving if you get interest.
But I would say ask your tax preparer if they have a form like a checklist, because a lot of them do.
We do.
Right. So, because there might be something that you're unaware of that you could be bringing that can help you, and you just don't know. So, I would definitely say ask them if they have a form or a checklist of the things that you should be gathering, so that when you go for your appointment. That is correct. You can be prepared. And I will also say to make sure that the person that you are using is a trustworthy person. That is correct. Because a lot of people I know go to those tax professionals who guarantee. Listen, if a tax professional guarantee you a certain amount of refund, don't trust them.
Yeah.
And even with it, I just think also there's a lot of young people and they don't know. Like they just want to get it done, right?
Correct.
But you have to understand that you're providing this person with your social and all of your information.
That is correct.
So, you got to be careful with that. You can't just share that information with any and everybody. So just be really prudent. We were just talking about how there are people who are scammers out there. You may be receiving phone calls.
That is correct.
Where they're saying,
I'm the IRS.
Right. They're the IRS. They're calling you because you owe money. And there's so many scams out here.
The IRS does not make phone calls. They will send you a letter. In the event, now, in 2019 and 2020, I believe the IRS starting outsourcing certain companies to collect for them. When that company calls you, they will verify that they are with the IRS, and you can call the IRS number to verify their credentials. But the IRS is not going to say, give me a value card, give me a gift card.
I was just telling Troy a story about a client I had, and he's actually pretty wealthy, and he got a phone call from the IRS. Now, of course, he wasn't handling his own finances. He had like an accountant and all these other people handling his stuff, and he received a call from the IRS saying, if you don't pay us by tomorrow, all these things are going to happen. And he got nervous, which I was saying to Troy, like, there were so many red flags here that he should have known that it was fraud, because they wanted to be paid in gift cards, which the IRS wants to be paid in gift cards. But he literally went and got like $10,000 or $15,000 worth of gift cards and gave these people the numbers over the phone.
Wow.
Because he was just so scared, because he thought it was the IRS and he thought maybe his accountant wasn't doing what he was supposed to be doing. If you're receiving these type of calls,
hang up.
Right. Like, think about it. Process what these people are saying and hang up. And even if you think it's real, hang up and Google IRS and call the IRS and say, hey, I just got a phone call.
Right.
I want to validate, were you trying to reach me? Or like Troy just said, you're going to receive a letter.
You're going to receive a letter.
If there's a discrepancy, if there's an issue, you're going to receive a letter.
And they give you 30 days to answer that letter. If you don't answer by then, they give you another 30 days, whatever the case may be. I almost got scammed like too. It was T-Mobile, not the IRS. But those scammers are out there. Right. Don't feel intimidated by someone's going to beg you for your money and something's going to happen, because they play on your fears. Alrighty, don't do that. Listen,
so we have a caller on.
We have a caller.
Yeah, we have someone with a question.
Okay, let's get to the caller right now. Let's see here. I think, hello. I think we got Steve on the line. Steve, you're on the Financial Empowerment Show. Welcome. How can we help you? What's your question?
Yes, hi, Troy. We're here.
Hi, Steve.
How you doing?
So you're live on our show. So what's your question?
Oh, okay. I had a couple of questions, but I'm going to ask this one here.
Okay.
There was a tax form because I owe taxes.
Okay.
And it said, is this tax form 9465 needed to make your payment plan for the IRS for the old taxes? Or can I just pay $200 to my own every month?
Okay.
Okay.
So it sounds like he wants to know, if he wants to set up a payment plan with the IRS, does he need to file that form, or can he just kind of make his own payment plan and just start paying them?
Okay, so this is your test that the IRS is scary, because they're not. They let you. They let you. Go ahead.
It's hard to laugh at IRS. It's all serious business.
Yes, serious.
Yes, it's serious.
It's serious business.
Okay, what happens? The IRS allows you to set up a payment arrangement for the amount due for your taxes.
Okay.
That is the form you request, 9345. I believe that's the name of the form. Don't quote me on it, but Paul will put the right form up there on the screen there. So you fill that form out. The payment plans are very simple with the IRS. You divide what you owe by 72, and that's your minimum monthly payment.
Okay.
So if you owe, give me a number. If you owe
$5,000
divided that by 72, that 72 equals.
Stop banging your hand.
Okay.
I don't want to have to beat you up on the show in front of the people. Come on.
All right. I can't help it. I'm excited. You know what I mean? All right. I talk with my hands. All right. I think I'm from New York. Okay. All right. Steve's from New York. All right. So what happens is that the 72 represents 72 months.
Okay.
So they'll give you 72 months to whittle down what you owe. Now, that's the minimum they require. However, you can always pay more. But the IRS wants something in writing saying that you agreed to pay this amount until it's done.
So you have to file the form.
Yeah, you have to file a form. What some people do is they owe and they might file it, but you'll still get letters saying that we got your money, but we want an agreement so you can pay this. So they want an agreement on form, on record, that you agree to pay that.
Gotcha.
Oh, okay.
Yeah, and that's a simple agreement. You fill that out, you mail it. I think you have to pay your what you owe by the 28th of each month, and you can have it directly debited out of your account, which I don't recommend. Or you can you can send them a check, and they because what happens is this. So because I don't want to me personally, I don't want the IRS to have my bank information.
See, but you said that were scary. See?
Okay.
Listen, for all you viewers out there, you see, he said no, they won't take your money.
She's trying to throw me under the bus 19.
Exactly. Bring that bus back on out here. Because he doesn't want to give his bank information.
That's right. And I have some clients who do, because they like the ease. They like the ease of automatic payments and stuff. But make sure you pay it on that day, because you don't want that agreement to be null and void. Then you're going to have to do another agreement. Then the letter starts again.
So if you have an agreement with them to pay a payment plan, but say that coming year you're due a refund, will they automatically apply your refund to what you owe?
Yes, they will, because you are in collection status. So if you owe $3,000, you're paying $25 a month, and you get a refund, and you get $1,500 refund. They're taking that $1,500 refund to apply it to.
You guys, you do not want to owe the IRS.
You do not. Remember, you are in control about how much money taken out, so you can cover your tax bracket.
Right.
And listen, for those viewers,
we still have Steve on the phone before you go to the viewers. Steve,
okay.
Did we answer your
question, Steve?
Yes, that's a good question. And then another one was, I like the idea of not giving them the checking account.
See, he likes that idea too.
Pay them directly. I like that idea.
You like that idea?
That is correct.
Well, Steve, you don't forget to pay them by the 28th, because you heard what can happen.
Yeah. You'll break the agreement, and the scary letters are going to start coming back again.
Okay. Well, thank you for answering that, because got to get that done.
All righty.
All right. Well, we thank you for calling in, Steve.
Thank you, Steve, for calling in. Have a good day.
All right, thank you. You too, now.
You're welcome.
All right,
Bye.
keep on listen to the Financial Empowerment Show. Hit that subscribe button. Tell your friends and family the Financial Empowerment Show is on.
It is. So what's our statistic this week?
Statistics this week. You got a tax. I'm going to say that fast 3 times. Tax statistics for those football fans out there. The IRS only audits 0.3% of tax returns.
That's such a small percentage.
That's a small percentage.
You know, we're always in fear of being audited.
And guess what? 74% of the audits are done by what? A letter.
So what does that mean? Those people are just getting a letter?
They're getting a letter saying that the IRS, they might have income that you didn't claim on your tax return for a current year. They might file and says, you have income for the last 5 years. We need some tax returns.
Right.
They might verify that. Like I have one letter who someone said they pay estimated taxes and they didn't, so they had to adjust it. So it could have been an adjustment to your return.
What about when we hear about like these celebrities who go to jail behind taxes?
That's a good question. What happens is that how they get paid is what I call pure money. They don't have no taxes taken out. Mm-hmm. So it's their responsibility to pay their tax liability. So that's why they have the accountants and stuff like that.
Right.
The accountant can't force a client to pay their tax liability.
But how long would they have gone before it gets to the point where they're being incarcerated?
It all depends. It all depends how much money they owe, how the years and stuff like that. So each case is different.
It depends on how much
each case
money.
is different. So
these are all hefty things. I don't want nobody snatching money out. I don't want to go to jail. These are all serious matters.
So that's why that W-4 form is very important for the state and your federal taxes, so that you can have the proper tax percentage come out every week. So by the time we do your tax return, you either break even or get a little back.
And there are some people that have to pay city tax too, right?
That is correct. Now, that's a good question. City tax are relatively a flat tax. So if you live in if you live in the city of Philadelphia, for say, they have a flat tax percentage. If you earn $30,000, I believe the flat tax in the city of Philadelphia, I think it's 4 or 5%. Don't quote me on it. They're taking 5% out.
Okay.
Flat. You don't have to. And a township in the state of Pennsylvania is 1%. They're taking that 1% out. So if you earn $30,000, you're paying $300.
So I have a question.
Sure.
Do people that only receive Social Security as income, are they responsible for paying taxes?
It all depends if they have other income on top of their Social Security. If they have wages, if they have pensions. But if a taxpayer who's just only receiving Social Security, I would recommend they do not withhold any taxes.
Okay.
Because they're not required to file.
I just feel like there's just so many myths out here about taxes and what's required and who's supposed to. Like, sometimes it can be so confusing.
But you know why? Because people are listening to their lunchroom accountant. Stop eating your lunch break. Listen to your lunchroom accountant. Get on the phone. Call 1-877-829-1099. Call your own tax professional so that you can get the real answer.
What if the person wants to research for themselves? Should they go to IRS.gov?
IRS.gov is a very good website. If you're not savvy with IRS language, you're just
it's confusing.
You're reading. Remember the Peanuts TV cartoon? You sound like the adult.
Okay. So it's a lot of technical terms.
It's a lot of technical terms.
Okay.
I have clients who get IRS letters, and the letters are simple, but there's just a fear of getting a letter from the IRS.
Right.
And I said, all you got to do is do this. They said, oh, that's it.
So quickly, Troy, just so we make sure we give the viewers some nuggets.
Okay, what's some nuggets?
What are some quick things that come to your mind? Some forgotten about things that people can write off their taxes, like just things that people just don't ordinarily off the top of their mind think of.
Okay, that's a good question. Okay, so that's not an easy, quick one. I'll do it brief.
I can say, we talked about it earlier, like uniforms.
Okay,
right?
so
a lot of people don't know that they can use that, right?
Right, not anymore.
Oh,
the tax laws changed.
This is why I'm not a tax person.
The tax laws changed. So, when you do your tax, you get a standard deduction. The government gives you a standard deduction to reduce your overall income. So if you make $30,000, if you're single, your standard deduction is $12,000.
Okay.
So that reduces the $30,000 minus $12,000. That amount is your taxable income.
Okay.
Alrighty. Now, were you talking about the uniforms and charitable giving?
Itemizing.
Correct. Gotcha. That goes on a Schedule A. Now, however, you can use itemized deductions. However, if it doesn't exceed the standard deduction of what the government gives you,
then it doesn't make sense.
It doesn't make sense to use it. So people say you can use it. Medical expenses, charitable giving, charitable miles, mortgage interest on your house, taxes.
So now that we're coming out of this pandemic, you know, everybody got a couple. Well, not everybody. A lot of people got a couple stimulus payments.
Yeah, 3 stimulus payments.
They got the child tax one. They were getting
the
monthly.
child tax. Oh yeah, the advanced child tax credit.
Right. Are these things tax? not deductible, but are they taxable? Do we have to pay taxes on the payments that we receive?
You do not have to pay taxes on earned income credit.
Right.
You do not have to pay taxes on your stimulus. You do not have to pay taxes on your advanced child tax
Even
credit.
though I know you guys hate, as high as the gas is, like, the stimulus money is gone.
Yeah. Yeah.
They gave us a stimulus, but as high as the gas is,
gone.
It's gone.
It's gone. Like, most states are giving money to their constituents.
I think the state of Delaware is the only one that
No, Jersey did it. California started.
My family in New Jersey did not get a check.
They didn't. California started that, I think.
Maybe it's new. Maybe it just started. Because I asked, because I thought it was for everybody.
No. It was a state thing.
Yeah.
It was a state thing.
So for our viewers that are out of the state of Delaware, we did get a $300
Whoopee!
Check. And
One tank of gas.
It said it was like a surplus.
Yeah, sir. Yeah.
Okay.
Listen, it took $55 during the pandemic to fill up my van. You know how much it takes now? $85.
It's $100 to fill up my truck.
Wow. And before the pandemic, it was probably what?
Probably about 70, right?
That is correct.
All right. So what's our Albert Einstein?
Albert Einstein.
Our quote of the week.
What did Mr. Einstein say?
He's talking about
Dr. Einstein.
This is what he's talking about in regards to filing taxes. He says that this is too difficult for a mathematician. It takes a philosopher.
Wow, the most smartest man of our time.
I don't think it's that difficult.
No, it's not. He was being facetious.
Yes.
But however, no, it's really the tax. It's for the average American is really simple. Know your tax bracket, have that taken out. But people say, I can't afford to live. Well, you can't afford to make a tax bill every year neither.
Well, on my end, I want to know. I want people to go to the website or send us the email because I have a question for the viewers.
Okay.
For those who are receiving tax returns, what are you doing with your tax return?
What are we doing? What are you doing with your tax return?
Email me.
Right.
Your answers, or underneath this show on YouTube, you can put it in the comments.
Right.
What are you using your tax return for? I want to know.
That is correct.
I'm really curious as to. I don't care if you're getting $400, if you're getting $4,000.
I have some clients tell me they need tax return to pay their rent. And
everybody's at different places in life.
Saying, if you need your tax return to pay your rent, what did you do the last 11 months?
I don't know. Maybe they were waiting for tax time to come around.
Let's go to some. I got some good information here about taxes that we jotted down. Sales tax. There's a tax that you had. Wow. All right.
Not in Delaware, we don't.
Guess what? The first to enact sales tax was West Virginia in 1921.
What do you know about this state, and why do you think they were the first?
They're one of the poorest states.
I was going to say, I don't know much about West Virginia.
Mountains.
There's a casino there, right?
Yeah, I'm not sure. They got the Appalachian Mountains. They were probably one of the poorest states during the Depression.
So maybe that was why they were the first to enact the sales tax.
That's
maybe
right.
They needed the revenue.
And 11 other states followed suit. In 1933, that was during the Depression. By 1940, 18 other states had sales tax in place. Listen to this. Alaska, Delaware, Montana, New Hampshire, and Oregon are the only states without sales tax. Hey, hooray for the first state.
Yeah, we're the only ones on this end.
That's right.
Sales tax.
That's right. No sales tax. Then guess what? If you live in Florida, if you live in Texas, you don't have to do a state return.
I know.
Isn't that great?
But I think this is why a lot of people come to Delaware.
That is correct, because especially in that tri-state area.
Yeah.
Yeah, that's right. Because no sales tax. You know, Christiana Mall is one of the second largest malls square feet wide in the country.
I don't like that mall.
Okay, she don't like that mall. All right, we got a lot of good things here at the first state. All right,
we do, but malls is not one of them.
Okay,
sorry guys.
All right, Montana. All right, I've been close to Montana. Never been to Montana. Been to Alaska though.
Really? Did you like it?
I loved Alaska.
I don't like the cold.
I had a crab leg. I'm not exaggerating. It was that long. I'm not exaggerating. Baby, I'm not exaggerating. You can only eat one. That's how big it was.
In Alaska?
In Alaska. It was beautiful there.
Maybe it's worth braving the cold for the crab.
It is. Actually, it was a 68 degree day there when we went there, but that's good.
So I hope we've touched on a lot of the points. Maybe some questions.
Tax fears.
Alleviated some. Well, Troy tried to alleviate your fear about the IRS. I did not, because
don't be scared of the IRS.
They still sound like scary people to me. They can put you in jail.
Get a competent.
They can take money out your bank account.
That's it. But that's if you would continue to ignore them. Don't ignore the IRS.
We want to encourage you to file your taxes every year. This is a very important document.
Yes, it is.
It's very important to your financial overall wellness that you are filing your taxes. You're staying on top of them. You know where your tax returns are, right?
That is correct.
How many times do people come and ask you for like a second printout or something like that? Yeah, hey, you have to have your taxes.
I like during the summer. All I'm doing during the summer is getting people tax return copies that I gave to them when they did a return, because they lost them, they don't have them.
So keep them, because when you're going to do these important things in life,
buying a house,
you're gonna need your tax returns.
Starting a business.
Yep, you're
That's
gonna need
right.
them.
Guess what? How long do you save your tax return? How long do you save it? Do you know that, Awanda?
7 years.
7 years?
No.
3 years.
Oh, I have way more than 3 years. I told you, I'm scared. I'm scared of the IRS.
Listen, if you have
I save my stuff.
If you have tax returns over 3 years, shred them.
Nope.
They don't need it.
I'm saving mine.
Okay. Listen, there's a word that was coined by Dr. Dale Harding, PhD. He's a retired professor of psychology and business. What's that word there, Awanda? Fear of taxes. It's how you pronounce it? Let me put my glasses on. Phorophobia. Phorophobia.
Yeah.
Okay.
I don't know.
It's called the fear of taxes. Okay.
Where did he get that?
That's a good question. Phoro means tax in Greek.
Oh, really?
Yeah.
Okay.
And phobia is the fear of stuff.
Fear of. Okay.
Yeah. See, people got fear of taxes. Don't be scared of taxes. Know your tax bracket. You are in control of how much refund you get depending on your income and your tax bracket. So get a competent tax professional that you can trust. Don't get a tax professional with saying they're going to guarantee you a $10,000 refund and charge you $2,000 for it. All righty, they're just trying to get paid. And then when that letter comes from the IRS, guess what happens? You got to answer that, and they're gone.
So make sure you review before you sign.
That's right. Know what you're signing. That is correct.
Thank you guys again for tuning in. If you have any other questions, email us. You can email Troy your tax questions, because I can't help you.
That's right. Arena. Listen, put your comments in the comment section.
Right.
Listen, hit that subscribe button. All right. Info at financialempowermentshow.com. Send us your questions. And listen, we'll see you on the next show.
Thanks for tuning in.
Thanks for tuning in. Bye-bye.
That wraps up this segment of the Financial Empowerment Show. Until next time, send us your questions to info@financialempowermentshow.com. Whether you earn $13,000 a year or $130,000 a year, let Troy and Awanda help you grow your money tree.
Strategy. You wanna buy your home or lease? I got a lot of golden keys to help you grow your money tree.